Good afternoon, everybody. Thank you for coming to our Ask an Expert Financial and Debt Management for Strategies for Businesses. We are very happy to be presenting this for you. Please be advised right off the bat that we are going to be recording this webinar. We're recording it now. So we just want to make sure that you know that if you have any questions that you've not submitted previously, to put them in the chat, and we will make sure that they are covered at the end of the presentation. We have submitted questions ahead of time to our presenter, Shannon, so many of your questions may be answered during the presentation. My name is Carol Benedetti. I'm going to be the moderator for this session. You're not going to hear an awful lot from me during the bulk of the presentation. I'm from the Aurelia Area CDC. We're a partner with the County of Simcoe on this Ask an Expert professional development series. Over the last 2 years, we've been able to bring you a wide variety of content as part of the Ask an Expert series, and I encourage you to keep an eye out for future events. I also want to just take a very quick moment to thank our regional partners who help us in putting on these webinars. The Small Business Center of Barrie, Simcoe County, and Aurelia, South Georgian Bay Small Business Center, the Aurelia Area CDC, that's us, Nottawasaga Community Futures, North Simcoe Community Futures Development Corporation, Community Futures South Georgian Bay, the Sandbox Center, and Georgian College. We are also going to be sending out a survey and follow-up information, access to the recording at the end of the presentation. So just be advised about that. I would like to not go any further before doing a land acknowledgement, and then I'll introduce our presenter and turn the event over to her. I would like to acknowledge that we are situated on the traditional land of the Anishinaabe people. We acknowledge the enduring presence of the First Nation, Métis, and Inuit people on this land and are committed to moving forward in the spirit of reconciliation and respect. So I would like to introduce our presenter. Shannon Jackson is passionate about helping people and thrives on assisting individuals and businesses in restructuring their finances to get a fresh financial start. She's been working in the industry for since 2008. She's with BDO Dunwoody, and I'm sure she'll tell you a little bit about her background as well, what the letters after her name means, CIRP and LIT. And she has extensive experience helping people in financial areas. So at this point, I'm going to turn it over to Shannon and enjoy the presentation.
Thank you so much, Carol. I was asked to present today on the topic of financial and debt management strategies for businesses. So before I get into the bulk of the presentation and the information that you really came here for, just a little bit more about myself. I have worked in the finance and insolvency industry since 2008. And if you recognize that time period, it was right at the start of the last financial crisis. So I came into the industry during a extremely unprecedented time period when it comes to the financial industry. I eventually joined BDO in 2015. I received my Certified Insolvency and Restructuring Professional designation in 2019, and I became a licensed insolvency trustee in 2020. I do specialize in both consumer and commercial financial restructuring, with the goal actually of helping someone avoid an insolvency filing, whether that's a proposal or a bankruptcy. If I can keep you out of that, I'm going to do my very best to do that. So I meet with clients every day, and we talk about their personal financial situation, and we talk about all the different options available, including options that perhaps I don't provide to you. Perhaps it's a bank, a lawyer, someone else that might provide a service that would better suit your particular circumstances. A little bit about BDO. We are one of Canada's largest accounting and advisory firms. We've been operating in Canada since 1958. We are actually an international company, but we've been in Canada since '58. And we have over 100 offices across the country. We have over 3,000 staff, and we specialize in tax services, accounting services, advisory services. We are a full service accounting firm that can help you really in whatever need you may have with regards to possibly personal finances, but as well in regards to your business. And we really are committed to helping to improve financial literacy for anyone that we can talk to. So, which is why that we put on these presentations and provide them to our local communities. Just a brief definition or discussion about what exactly is financial literacy. It really just centers around how we earn, spend, and save our money. It's the ability to understand how money works in the world and how we interact with it on a daily basis. Now, our financial decisions they're really becoming more and more complicated as the years go by because there's new bank products that get introduced, perhaps new investment opportunities. And then as well with the government assistance that has been provided over the last couple of years, these decisions are becoming more and more complex. So it's important to become or to really get a good grasp on these concepts early on to give yourself that advantage. And many business owners face challenges, especially since the pandemic, with managing their cash flow and may lack the confidence or the skills or knowledge that are necessary to get things back on track. So what has been the effect of the COVID-19 pandemic? When March of 2020 came around, it was unprecedented and it was a bit of a shock, I think, to all of us. It forced us all to go home and stay home. And we were forced to lock down our businesses. And then if you were considered to be non-essential, you were locked down for a significant period of time. And that resulted, of course, in a sudden reduction in your customers, a huge reduction in your cash flow. Suddenly there wasn't any revenue coming in. Perhaps it meant that you were laying off staff or maybe even terminating staff. And then, with the hope of being able to perhaps reopen your business, you were paring down. However, you were still having to maintain those regular expenses like rent, utilities. All of those things still needed to be paid, even though your revenue has dropped so significantly. And possibly as well, added expenses were there for you, where you had to put in safety precautions in your business location. Maybe you had to invest in additional technology services in order to accommodate social distancing and to be able to accommodate the safety precautions that were being put in place by the government. So there was all of a sudden a change in your business operations. Maybe you're starting to utilize more digital tools. I know that we had to do that here at BDO. Maybe you had to implement a curbside pickup or a delivery service in order to provide your products. Then there was the struggle of maintaining the safety standards that the government was putting in place. And of course, these were changing almost, I think, at one point on a weekly basis. So the timeframes of these changes were unknown. So the pandemic really put businesses into a very unstable environment. And it was definitely difficult to put any kind of future plan in place because there was so much unknown through this whole process. Now, the government tried to help. And many businesses utilized the government support programs as they became available and as they were launched. And these were put in place with the goal to compensate for the sudden loss of revenue and perhaps assist with those expenses that you needed to keep paying through this through the pandemic: wages, rent, loan repayments, financing agreements as well. And many of the programs that were put into place, they were targeted towards specific industries, regions, and even some minority groups. I'm going to give examples of sort of the big 5 loans and programs that came into place. Some of them you might be familiar with and took advantage of, some of them may not. The big one I think that most people are familiar with is this first one, the Canada Emergency Business Account. The CEBA loans is what we call them. Those were issued through major banks, but they are guaranteed by the federal government. They were interest-free, partially forgivable loans up to $60,000. Now, for borrowers that were in good standing, if you repay the balance of this loan before December 31st of this year, so December 31st, 2023, it will result in a loan forgiveness of up to $20,000. So some of you might be in this position where you have the next 12 months to repay this loan. And in order to do that, you're going to want to put a plan in place so that it's going to be successful to take advantage of the forgiveness of the $20,000 at the end of the year. To give you a little bit of statistics, almost 900,000 Canadian businesses were approved for this loan, and over $49 billion was advanced by the banks as part of this program. The next bigger one was the wage subsidy, the emergency wage subsidy program. This was available during March of 2020 to October of 2021 for basically a 21-month period. It was only available to eligible employers, and it was based on a predetermined revenue decline. So if your revenue declined by a certain percentage amount, you may have qualified to participate in this program. Over 5 million applications for this program were approved. And again, over $100 billion was advanced as part of this program. Now, this particular subsidy is a taxable government assistance, and it must be reported on a tax return. So what that means is it's taxable. There is a required tax amount that needs to be paid on these amounts if you took advantage of these programs. The next one was the Recovery Hiring Program. And this happened almost in conjunction with the wage subsidy. It came into place almost towards the end of the wage subsidy period. It was in period 17 out of 21 periods. It came into place. The employer who qualified for these programs, they could not claim money from both programs. They could only claim from the program that provided the most money to them. From this hiring program, over 178,000 applications were approved, and almost $1.5 billion was advanced. And this is the same where it is a taxable government assistance program, and it does have to be reported on a tax return. The next two have to do with rent subsidies. So the first one that came into place was just specifically for commercial landlords. It was the Emergency Commercial Rent Assistance. And again, this was a forgivable loan, and it was offered between April and September of 2020. Again, just to commercial property owners. It covered 50% of monthly rent payments that were payable by, again, eligible small business tenants who were experiencing financial hardship during the pandemic. The actual loan itself covered half of the rent for the landlord. The landlord then agreed to waive 25% of the rent, and the tenant in that property agreed to pay the remaining 25%. This loan was then forgivable on December 31st of 2020, as long as the property owner fulfilled the terms of the program at that time. And then the next subsidy that came into place was the emergency rent subsidy, and it replaced the commercial one. I think the reason for that was the commercial one was just for commercial landlords. The emergency rent subsidy broadens the qualifications for the particular program. So smaller businesses were able to be eligible for this program. And it provided financial assistance for eligible fixed property expenses, including your rent and possibly interest on commercial mortgages. And again, the eligibility or the amount of money that you were able to receive, again, was based on the percentage of your revenue decline. So it was very similar to the wage subsidy program. This one was paid either directly to the tenant or the property owner, and it wasn't restricted to small businesses. Again, statistics: over 2 million applications were approved for this program, and over $7 billion was advanced as part of the program. And again, it's a taxable government assistance program, and it must be reported on a tax return. So our current financial atmosphere as we head into 2023. If you're a business owner, I'm sure you've already made changes to how you operate your business just because of how the pandemic has really forced us to do this. With this coming year, interest rates are expected to continue to climb, hopefully not at the rate that they did in 2022. However, it's still a possibility. So if you have any loans or mortgages, anything with a variable interest rate, there could be further increases in this coming year. Inflation, of course, has added to our expenses, has raised the cost of our fuel, our supplies, perhaps your inventory. Everything has gone up in price. There's also rumors of a recession coming this year. Consumer debt is at a record high as well. Now, this may affect you. It may also affect your customers. The current rate is $1.82. What that means is for every dollar we earn, we are spending $1.82. And so Canadian consumers right now are carrying a record amount of debt as we head into this year. There's also an elevated demand for workers. You may have noticed as an employer that it's very difficult to find staff right now, which again adds to the stress levels of operating your business. And then, of course, there's the ongoing supply chain challenges. So depending on your business, you may be facing these types of challenges as well as we head into this year. So let's talk about some strategies maybe that you can investigate as you move forward this year. You want to do a health check on your business. Part of that health check process is you're going to do a review of your original business plan, and you're going to make adjustments to that business plan in preparation for this upcoming year. You're going to want to, as you continue through the year, continuously and regularly review your cash flow. And if the cash flow is telling you, maybe if the cash flow is not balancing, is maybe where I should start. Then you might be looking at expanding your revenue generating activities. Maybe you're looking at reducing your spending to help the cash flow balance, or to at least be in the positive so that you're showing that you're generating a profit. You may be also considering how you can retain your employees, especially the good ones that you want to keep. You want to be thinking about your tax planning strategies as you move forward. You also want to make sure that you have advisors in your corner that are going to give you advice tailored to your particular situation. And then you want to think about how you're going to respond to any debt challenges maybe that your business is going to be facing in this upcoming year, especially if you took out that CEBA loan. It's going to be due at the end of this year. So you're going to want to think about putting a plan in place as to how those repayments are going to work for you. So starting with a regular review of your cash flow, this is really your profit and loss statement. And this is where your bookkeeper, if you have one, your bookkeeper is really your best friend. And they will be able to prepare this for you, ideally on a monthly basis. Now, maybe you're doing this yourself, and that's perfectly fine. I think, though, I do recommend a monthly review of your cash flow is really critical. What you're going to be able to tell by this is you're really looking at the performance of your business. What is the revenue in comparison to your expenses? First, when you look at your revenue, you want to compare it to the previous months. Is it going up? Is it going down for the last 3 to 6 months? And you also want to compare it to last year. So your revenue for January 2023, how did it compare to 2022? What you're looking for is any trends. If your revenue is going down, then you're asking why. Why is it going down? Was there a temporary construction in front of your business and the customers just weren't coming because the construction was causing an issue? So maybe that's just a short-term problem. Maybe you'll find that there's a more long-term issue that needs to be dealt with if your revenue is declining. As well, if your revenue is increasing, ask the same questions. Why is it going up? How can I continue these trends to help it to consistently improve month after month? Next, you're going to look at your expenses. Again, looking at what expenses have increased from the month previous. Why did it increase? Was it just a temporary problem, or is it going to be consistently increasing as you move forward? Are there any expenses maybe that can be decreased? And we'll talk about a little bit more about that in a future slide. But evaluating each individual expense is really important as well. Part of reviewing your expenses as a business owner is to help you to be able to conduct your business efficiently. For example, just as maybe you're a contractor and you need to be able to price a job accurately. Well, you need to be aware of how much things are costing you in order to be able to price a job accurately. And if there's been any sudden changes in those types of expenses, you need to be made aware of it right away to make those adjustments as you price jobs in the future. The last thing you're going to look at in your profit and loss statement is how are you managing the debt of the business? Number one, are you staying current on your payments? Number two, is the balance of those debts actually decreasing? You may be making the minimum payments and staying on top of everything, but is the actual debt going down? Because if not, those payments you're making every month is not an advantage to you as a business owner. You want to be able to not only just pay the interest, you want to be able to pay the principal down as well, to get that debt off of your books as quickly as you can, because the less debt you have, the more profit you're going to be making in your business. So if you are finding your revenue needs to go up, you need to increase your cash flow coming into the business. Maybe you're looking at expanding your revenue activities. First thing I would say is listen to the needs of your customers. Have your customers suggested to you that they would like a certain service from you? They would like a certain product from you that you're not providing now. And perhaps that is a legitimate suggestion from them and something that you could look into. And then, of course, as part of that, maybe you're expanding your product or service offerings. Consider upselling or selling more to your existing customers. In order to do that, maybe you're going to offer some sale promotions, such as bundling some services together in order to make it more of a eye-catching opportunity for your customer. Maybe you want to explore selling in new markets, whether maybe that's a different locale, a different location, um, or maybe you're looking at selling in different ways. One thing to consider is expanding your payment options. Customers now, I think, especially because of the pandemic, they're looking for more flexible ways to pay for services. So if you don't already offer those services, you might want to consider that. Lastly, is consider your online presence, especially when it comes to customers being able to leave reviews for you, whether it's on social media or Google. The last statistic that I looked at was over 90% of customers will look at reviews first before they purchase a product or a service. So these online reviews have absolutely become critical as business owners in order not only to keep the clients that you already have, but to generate a new client base for them to come to see you instead of somebody else. So definitely think about growing your positive reputation online in order to increase the potential revenue that's going to come in through your doors. The next part is look at reducing your spending. Always focus on preserving your cash in your business. You always want to be of the mind of, I want the largest profits that I can make. We all want that as business owners. So you want to make a plan to track your expenses diligently. And this is where reviewing your cash flow every month is really important, because you're tracking these expenses from month to month to see how they fluctuate. Look at comparing your percent of expenses in comparison to your revenue. Compare that to other businesses in your industry. Now, this is called benchmarking, and really your accountant is probably the best source in order to get these comparisons, but you can also go to other industry groups or trade groups to get this type of information to see if what your percentage of expenses are in comparison to other people that are in the same business as you. Have a look at reviewing your agreements with your landlords, suppliers, utilities, advertising, wages, salaries, insurances, bank fees. All of these can be negotiated. Now, of course, landlords, we're in a fixed lease for a period of time, but if your lease is coming up for renewal, perhaps it's time for a discussion with the landlord. Agreements with suppliers can be negotiated, utilities. All of these things you can look at to find ways of reducing the amount that you spend on these particular things. And think about too, are any of these agreements, can you cancel them? Are they really necessary in order for you to continue to operate your business? And of course, the last one is renegotiate those existing agreements. So again, if your lease is coming up with your landlord, maybe you're looking at renegotiating on certain terms of that lease to help with your cash flow as you prepare for this upcoming year. A few other examples of how to reduce some expenses. Maybe you're looking at finding a different supplier for a certain product or a different service. Shop around to see if there is someone else that can provide you the same thing with the same quality at a lower price. Maybe you're looking at a more local option for some of these suppliers. Maybe you can look at improving some of your efficiencies through technology, whether it's scheduling appointments, payroll services, training, automating some time-consuming tasks. Perhaps there are ways where you can put something in place that you won't have to be spending as much time from yourself or maybe your staff, which ultimately saves the business money. One of those is you could go paperless. If you're going paperless, if at all possible, You're not going to be spending money on printer ink or paper or all those physical things that you need to actually have a piece of paper in your hand. Think about streamlining your marketing costs. Are you spending your advertising dollars in the most advantageous way for your particular business? And take advantage of free or at least inexpensive online resources, tools, applications. Look at where your website is being hosted. Can it be hosted someplace else for perhaps a lower cost? Look at maybe some applications that could help you with organization or scheduling, and look at your social media as well to see how you can take advantage of all of those relatively inexpensive and perhaps free resources. Employee retention. As I said before, we're right now we're in a period of time where it's very hard to find employees. And when we have them, we want to keep them, especially if they're doing a great job for you. Now, employees do leave for a number of different reasons. Perhaps they feel like they're overworked, they're unsupported, there's limited opportunity for advancement. Maybe they're unhappy with their compensation, they're bored. There's a number of reasons why people leave. Just some suggestions on ways to improve this and hopefully keep the people that are most important to you. Think about some processes regarding onboarding or orientation. So when you hire a new staff member, what programs do you have in place in order to make that transition as smoothly as you possibly can as you train them? Maybe consider a mentorship program if someone is looking to advance in their career. We want to try to offer competitive compensation or benefits as well if you're in that position as an employer. Think about any other kind of perks that maybe an employee might be interested, or any kind of bonus structure as well. Proactive communication. This is one that I think is really important, especially if you have a large team of employees. Communication is really important to keep everyone up to speed and in the loop as to what's happening with the business and how everyone can contribute to the success of the business. Offering continuous feedback and recognition of achievements is also a great thing to do. Employees, if they feel that they're being recognized and feel that they're being valued, that is definitely incentive for them to stay with you as an employer. Offering training and development opportunities as well. And then offering that work-life balance, which is one of those things that has really come to light since the pandemic. Perhaps you're in a position where you can offer a hybrid working environment or something like that to help balance out that work-life situation for an employee. Tax planning. Really, really important as a business owner. You want to collect and track your receipts for every single business activity. Now, to put a disclaimer, or at least something as advice, if you have a bookkeeper, which again, I highly recommend you have one, but if you do, please don't give them a shoebox of receipts. Try as best as you can to summarize the information for your bookkeeper to help them to put together the information in a much more timely way for you. However, tracking those receipts is definitely really, really important for every single business activity that you have. Even when it's a tank of gas for your car, if you used your car for something that generates revenue for your business, that's a business expense. So those are really important to keep track of. Second really important thing is always, always maintain a separate bank account for your business activities. Even if you are a sole proprietor, have a separate bank account for your business. Whatever revenue is generated from the business goes into that bank account. You pay your business expenses from that account, and whatever is left, or however much is designated for you as profit, you transfer that out into your personal business account. And keeping those bank accounts separate is so critical for your bookkeeper, as well as your accountant or whoever prepares your taxes. It's absolutely critical. Next part is make sure you're filing all of your Canada Revenue Agency remittances on time, your GST and your source deductions for payroll. Make sure you're filing those on time and staying current on all of the remittances that need to be paid. I do recommend some businesses will file their GST returns annually. I suggest at the very minimum you file them quarterly, because then you can remit those amounts 4 times a year instead of being stuck with an amount owing at the end of every year and the cash just isn't there to be able to pay it. And then second to that as well is make sure you're filing all of your, if you're operating a corporation, make sure you file your corporate tax returns in a timely manner as well. Make sure that they're filed on time. Plan for possible higher tax liabilities depending on whether you took advantage of the government subsidies during the pandemic, like the wage subsidy or the rent subsidy. Whoever prepares your taxes for you will be able to help you plan for those potential liabilities owing. I have a link here for our website. We have an article about the top 5 year-end tax planning strategies for your business. That's just on our bdo.ca website. And there's lots of other good resources on there as well about strategies for your business. So you can have a look at that. A few other things, always be prepared for any audits maybe that CRA has. Don't be scared of these. It's just the government just wants to check in, make sure you have all the proper books and records for what's being reported on your taxes. Plan any timing of depreciable asset purchases and sales. Again, something that your accountant can help you with if that is indeed something that you will have to consider. Find the most tax efficient way to extract funds from your business. Again, your accountant will help you with that. And be aware of any tax implications if you are borrowing from your corporation. So if you are borrowing from your company as a shareholder's loan, if you do not repay that loan in a 2-year period, it must be reported as income on your personal tax return. So bear that in mind if you are drawing any funds out of your company. Have some advisors in your corner. These are so critical as you operate your business. You want to have some people in place that are going to give you unbiased advice and that specialize in the knowledge perhaps that you don't have as a business owner. And they can identify areas of concern as well. First one is a lawyer. A lawyer will help you to incorporate a business if that's at all necessary for you. They can help negotiate leases, put together shareholder and partnership agreements, succession planning, franchise agreements, trademarks, patents. Lawyers are there to help you with all of that, all of those challenging things. Your accountant is another one. So not only will your accountant prepare your financial statements for you and your corporate tax returns, but they can also assist you in other service lines, mergers and acquisitions, due diligence, bookkeeping services. Maybe you're looking at having to raise some capital to infuse into your business planning, succession planning. Your accountant, or if you are going to a full service accounting firm like BDO as an example, it's a one-stop shop where you can get all of those services in one place. Your bookkeeper, they're going to regularly monitor your books and records, and they're going to file all of your GST and payroll remittances on time for you and make sure that those get done for you. Marketing. A marketing professional can help tailor your budget and get the most return out of the amount that you have earmarked for any kind of advertising or marketing efforts. And most likely they're going to focus on your online presence. A financial planner. Whether that's for your business or for you personally, financial planner is absolutely somebody that you should talk to. Your bank manager, they can give you advice on the best products that are going to help you at the bank. Maybe you're wanting to, maybe there's a certain type of bank account that will help you in your business with perhaps lower fees, but with better services. They can help you with better interest rates, possibly some investment advice, bank fees, and things like that. And then, of course, there's our family and friends or other professionals in the industry that you work in. We can rely on those people. Perhaps they have the experience that we don't have. And so asking them the questions, getting advice from them, if you trust them, I think they're always a great person to have in your corner. So responding to some debt challenges. According to Health Canada, long-term financial worries cause stress, and stress is considered to be a risk factor in many diseases, just as one example is heart disease. And of course, it has a negative effect on your mental well-being. Keeps you up at night often. So some warning signs to look out for if you're facing some unmanageable debt. Maybe you're missing some payments, or maybe you're only making the minimum payments. Maybe you're using one form of credit to pay another. If you're using credit as a necessity instead of a convenience. If you're always staying near the credit limit at all times. If you are borrowing from high-risk lenders or high-interest lenders, or if you are getting collection calls or demand letters. These are all warning signs that it's time to definitely talk to a professional like myself as a licensed insolvency trustee, just to look at what your options are. Because the earlier you speak to a professional, the more options are going to be available to you. So how can we respond to some debt challenges? Perhaps the issue is just a cash flow problem. The only way to fix a cash flow problem is it means you are not earning enough money in order to cover your expenses every month. And if that's the problem, there's only one of two ways of fixing that. You either increase your revenue or you decrease your expenses. So it's reevaluating that cash flow every month, just like I talked about, to see what changes can be made in order to make that balance out. Perhaps you're looking at liquidating some unnecessary assets. Maybe you are operating a corporation and let's say it's a moving company and you are utilizing two out of four of your moving trucks on a regular basis. That's consistent. And you're finding that you've got a couple trucks there that you're just not using, at least at the time. So maybe it means liquidating some assets to bring in a little bit of cash. You definitely want to create a cash flow plan as you move forward into the year. Not only so that you can cover those regular expenses that come up every month, but you also want to prioritize any debt repayments. Do you have to repay anything to CRA? Are your landlord rent obligations up to date? Any loans to the bank? What suppliers do you owe? Prioritize all of those to make sure that you definitely want to pay everybody. However, if you need a certain piece of product in order to have the inventory in your location to be able to sell that product, obviously that's something that you're going to have as a priority. And of course, CRA for HST and source deductions is always a priority. If those debt repayments or regular debt payments are unmanageable, you can renegotiate or enter into individual payment plans with each individual creditor. And you can do this simply from your kitchen table. You can call up Canada Revenue Agency directly. Maybe you have an outstanding balance on your HST account. You can enter into a payment plan with them so that you are paying X number of dollars every month in order to repay that amount. And you can do exactly the same thing with anybody that you owe money to. Perhaps you're looking at renegotiating some interest rates, whether that's with your bank or other products that you might have that are carrying interest. You might consider consolidating the debt. Maybe there's a way or the bank that can help you to provide a loan to you so that you're paying off all of your liabilities and you're just making one more manageable payment on one loan. Think carefully before you infuse any personal funds into your business because it may not be recoverable. It's really important to be honest with ourselves as business owners to see if, number one, your business is going to be viable. Will it be able to, if you didn't have any debt obligations, would the business be able to continue to operate, pay its regular operating expenses, and be profitable? And if that's the case, then we're looking at restructuring the business in some other way. So if the issue with the business is not a simple fix through the cash flow, then we're looking at a couple of other different options. There are two options that can be offered through someone like myself as a licensed insolvency trustee. These are insolvency proceedings. The first one is a proposal. It is a formal restructuring of your business. And there's a couple different ways of being able to do a proposal. If you're in the position where you're ready to shut the doors, maybe you're at retirement age and you've made the decision that you don't want to continue to operate, but maybe there's still some value to the assets of the business. And so a proposal could be, we call it a liquidation proposal, where you would liquidate the assets of the business, offer those funds to the creditors as a settlement on the debt that's owed. A proposal generally offers less than 100% to the creditors. And the creditors get to vote on whether they accept what you're offering or not. A restructuring can also be if the business is going to continue operating. Maybe it's just restructuring everything. As I say, if the business can continue where you're generating enough revenue in order to pay all the regular operating expenses of the business and generate a profit, doing a proposal can restructure the company so that all of those debt repayments are grouped together to make it a lot more manageable. And the creditors that can be included in a proposal is absolutely everybody. Your secured creditors, unsecured, landlords, Canada Revenue Agency, employees. All of these types of creditors can be negotiated through a proposal. The time period for proposal is generally 5 years, but it can be extended or doesn't have to go as far as 5 years. Every situation is different, so it can be customized to that particular situation. And the terms of the proposal can also be customized. Usually, the business is making a monthly payment on the proposal. However, it could be maybe a quarterly payment the business makes. Maybe it's going to be a lump sum payment from the sale of assets. There are different ways, and it's all unique to the situation. And like I mentioned before, creditors get to vote on whether they accept what you're offering or not. Now, thinking about a commercial proposal, often it has an effect on our personal finances as well, because maybe as a director of your corporation, maybe you have a director liability to have to pay HST and source deductions for your company, or maybe you have personally guaranteed some of the business loans. And so that often then affects us in our personal capacity as the business owner. And we might need to look at some personal options for you as well in order to manage all of the debt all in one process. Always the last option for a business is a bankruptcy. Always last option. This is when the business stops operating. The trustee has to take possession of all of the assets of the business for the purpose of liquidating everything. If there's any secured assets like vehicles or leased equipment or anything like that, if there's no equity in those assets, they're returned to the secured creditor. And out of the funds that are realized from all of the secured assets, or I'm sorry, all of the assets of the business, those are then paid to all of the unsecured creditors and the debt is dissolved. CRA debt is included in a bankruptcy. And as I mentioned, it releases or discharges all debts owing. And the same thing with a proposal is a bankruptcy often has an effect on our personal finances as well, especially when there's director liabilities or personal guarantees for some loans. So as a summary to the discussion, as we know, the pandemic was it was unprecedented, and it resulted in a huge shift on how businesses operate. The government assistance that was available in order to help businesses in the short term, it helped to compensate for lockdowns and reduction in revenue. Now is the time to review the obligations of these loans or the subsidies perhaps that you received and prepare for the future payments in order to meet the deadlines that were required, especially if you want to take advantage of the forgiveness of some of these debts, a portion of some of the debts. You want to review your financial strategies as you move forward and make any adjustments that you can now. Take advantage of the advice from any trusted advisors to optimize your plan of action. If the debt is overwhelming right now, don't be afraid to take advantage of a free consultation with a licensed insolvency trustee like myself. It's just a free talk, free education. Let's look at your particular situation. Let's come up with a plan of action that can move you forward from here. And of course, the earlier you make your plan, the better position that you're going to be in order to be successful as you move forward. So there were some questions that were submitted before the presentation happened today.
Right.
I'll do my best. Did you want me to go through this list, Carol, or did you want to address maybe any that have come up in the chat?
Yeah, you know what? I think I'd like to, some of them I can kind of put together into maybe several into one question, and a couple of them I think I want to prioritize. So okay. I can work through this as efficiently as possible. Are Business Banks of Canada loans wiped out if an incorporated business becomes insolvent?
So I think that question is focused around the CEBA loan that the government advanced, because the Bank of Canada doesn't actually grant loans. So I think this question is focused on the emergency loan that came out from the government. So if that was issued to a sole proprietor, then the person operating that business is personally liable for that loan. A bankruptcy will get rid of it. You don't have to pay it. A company, if it's issued to a corporation, it is not personally guaranteed. So if the company files an insolvency proposal or a bankruptcy, it wipes out the loan.
So the answer is yes to that question.
Correct.
Okay, great. Is there a process, or can you suggest a process for negotiating repayment schedules for the government loans? You talked a bit about negotiating with suppliers and other creditors. Is there any kind of official process or a process you would suggest for the government loans?
So if you have received any kind of notice from the government for sort of a demand of payment, there is likely an agent name on that correspondence. If at all possible, you want to contact that particular person who is responsible for your account. If you're not at that stage yet, if you're not getting any demand letters, it is a general phone call to their business inquiries line and setting up making that negotiation right from your kitchen table to say, I know I owe X number of dollars. I'm able to pay X every month. Can I set this up to get us on track?
And have you found in your experience that government agencies are willing to negotiate in that way?
Yes.
What would you say is, was just not on the questions, but what would you say is the biggest mistake that people make when looking at their debt and trying to figure out what to do about it?
Biggest mistake. I think the biggest mistake I see on a daily basis is perhaps hoping that something is going to change quickly in the future, so that um, a decision doesn't need to be made, perhaps if they're looking at an insolvency.
So inaction.
Yes, yes, that's exactly it. It's inaction. It's I call it the ostrich effect. It's burying your head because um, the sooner you recognize that there's an issue, or perhaps there's going to be an issue in 3 months' time because you know of a change that's upcoming,
Mhm.
the sooner you know, the definitely the more options are available to you. So the sooner you can have that conversation with a professional, the more options are going to be available and you can go from there.
Right. And I mean, I hate to think of this as a positive, but if there is a somewhat positive side to this, there's so many business owners in the same position right now. You know, talking about debt and debt management as we're doing right now is certainly nothing unusual and nothing to be ashamed of. Being proactive about it
Absolutely.
is a very positive step.
Yes.
There's a question here about leverage that a business should take on in this economic environment. How would you talk about that?
So unfortunately, we can't really give a firm percentage as to um, leverage or perhaps how much you should invest personally into your business and things like this. It really is all dependent on your particular industry, how you are operating your particular business. Those types of sort of complex questions should be taken to your advisors, usually your accountant and your bookkeeper. Um, there's and they can tell you as well whether you're on track with sort of industry standards as well. So that is the type of questions that it's really complex to the individual situation, and you should go to your advisors to get that answer.
Okay. How does one make the decision as to how to properly consolidate their debt? I have a couple of questions around that. One is, when is it time to pull out an RSP? When do I look at my home equity line of credit? How do you evaluate that?
So definitely, if those are considerations that you're thinking about now, you're going to want to talk to an advisor or a licensed insolvency trustee, because there are tax implications if you withdraw from your RRSP. As well, a home equity line of credit it's secured against your home. And so if you are thinking of infusing money into your business, it's really taking a serious look to see whether your business is viable first before taking on that risk personally on your home. And so the one other thing too about RRSPs is if you are in a position where an insolvency is coming, whether it's a bankruptcy or a proposal, an RRSP is actually exempt from seizure, which except for any contributions that you've made in the last 12 months. And so if you have an investment like that and you need to file a bankruptcy, it's protected. No one can touch it except for your last contributions in the last 12 months. So that's important to know if you're facing that option.
Absolutely. There's a question here about let's see, how to find a good accountant. You talk about talk to your accountant, talk to your bookkeeper, talk to your advisor. What are the things that we should be looking for when we're looking? Because maybe sole proprietors have been doing this all on their own all this time. And now it's time to try to reach out for some professional assistance.
Yes, yes. So um, if it's absolutely fine if you're able to keep your own books, that's great. However, it's very time consuming. So if at all possible, I do recommend getting an outside bookkeeper and an accountant to help you. When you're looking for one, it's really looking for what type of services are you expecting them to do for you? As well, look at their reputation. Um, Talk to people that perhaps are already clients. Look at reviews. It is kind of a personal choice as to who you want to go with. You may want to look to what kind of industries that they specialize in, because there are certain accountants that will only do certain industries. So it's taking all of that into consideration. Of course, if I can make a plug, BDO provides all of these types of services as well. And so it's really having a look at what your needs are.
Right. Okay. We're getting pretty close to our closing time, and I still have probably a dozen questions here that we haven't gone through. So I think what we will do is we will, if with Shannon's permission, I know she's seen the questions ahead of time, maybe she can take a look at them and we can provide a little bit of follow-up in the follow-up email that we send out to participants rather than going through the rest of these questions. I have a real quick question though. I know that one of the ways that businesses often pay for things when they're trying to, you know, generate some payment up front and recoup it later and pay off is a credit card. What's the going rate on a credit card right now? What's the growing interest rate that you should be balancing how much interest you're paying if you're using another method of borrowing money to pay that same debt? Like the credit card's easy, but is it your best deal?
Right. So the average, then I would say the better rate on a credit card is going to be around 18, 19% of interest.
Wow.
It's all going to be dependent on, if it's a personal credit card, it's all dependent on your credit history and things like that.
Mm-hmm.
So if you are paying for things using a credit card, I always tell people try to use your credit card like a 30-day loan, because if you can pay off the balance of it in full within 30 days, you won't pay any interest on it. The interest rate won't matter.
Mm-hmm.
But you have to be able to have that cash flow in place to be able to make those payments when they become due and make the payments in full.
Right. So always I mean, it might be easy just to use the credit card, but it's going to end up costing you more in the end.
Exactly right.
I think it's something we all know, but so I think we'll have to end it here, even though we have quite a few questions, but we will do a follow-up with you. I want to thank Shannon very much for her time today, for you know, putting so much thought into this presentation and for her expertise. And I thank all of you for attending this session. A couple of things to note before we close. Again, we will follow up with a survey and we would appreciate your feedback on that, and a copy of the presentation and any additional resources. Please watch for this. If you're interested in hearing more from through Ask an Expert from more experts, you can find this information on the series at simcoe.ca/ask an expert. Thank you again to all of our partners for supporting this program, and we wish you all a fantastic rest of the week. Stay safe, everyone, and looking ahead, have a great weekend.